Welcome back, everyone, to my stock market weekly update series. In this week's episode, Elon Musk continues to sell Tesla stock in the wake of acquiring Twitter. Of course, Tesla stock has been crashing all year long, and as a shareholder myself, I'll give you my quick thoughts. We also had the Fed raising interest rates yet again this week, sending the markets lower as recession fears continue to grow. I'll give you my thoughts on that as well. And as always, we'll just quickly do a rapid fire run through of some of the biggest gainers and losers for the week as well. It's going to be a fun one. Timestamps are for you down below if you need them. But with that said, let's go ahead and dive straight into it. All right, and starting first here with the markets, last week we had the S&P 500 fall by over 3%. So this week actually started off in the green for both Monday and Tuesday as the market was trying to bounce back a little. But once Wednesday came around, the Fed announced more rate hikes with a fairly hawkish stance that sent the markets falling all three of the following days, leaving the S&P 500 down 2%, over 2% for the week. The tech-heavy Nasdaq followed with just about the same performance, but slightly worse, at a 2.7% drop for the week. And from the top, this now leaves the S&P 500 down over 20% in a technical bear market once again, while the Nasdaq continues to go through a very large crash, down over a third of its entire value. Focusing in on that market news though, we had the consumer price index released on Tuesday, which actually showed inflation cooling down a bit as it came in lower than anticipated at 7.1% versus 7.3% expected, while also continuing the trend of falling inflation rates for the past 5 months in a row, down from over 9% back in June. However, this is still extremely high inflation. In fact, we are still sitting at the highest inflation rates in over 4 decades. And as a result, the Fed came out the next day on Wednesday and announced another 0.5 percentage point increase to interest rates in order to continue their fight against it. Of course, the fear is though that they are raising rates too quickly, as this is now the 7th consecutive increase. And while it is at least a smaller increase than the previous 4, which were 0.75 of a point each, it was still enough to put us at the highest interest rates since the financial crisis of '07, leading to new recession fears if we were raising rates too quickly. Yet, despite all that, the Fed is still planning to continue raising rates throughout next year until they reach their end goal of around 5% interest rates before they finally start dropping them back down in 2024. The Fed Chair Jerome Powell had this to say about it. Inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases, but it will take substantially more evidence to have confidence that inflation is on a sustained downward path. And he also noted that they have to keep the fight going for now so that the expectation of higher prices doesn't become a normal standard for the US economy. So looking ahead, the Fed will likely raise rates throughout next year until they surpass 5% and then start cutting those rates down in 2024 by a full percentage point down to around 4% and then cut another point in 2025 down to 3% and then finally get it to around 2.5% for a more neutral long-term rate. So basically what this means is that you should expect the Fed to be in full control of the stock market for these next couple years. And given that they're not planning to lower rates anytime really soon, you shouldn't expect the stock market to really skyrocket either, because that tends to happen when those interest rates come falling down, which could take a little more than a year. So what I think is going to happen here, to give you a little bit of an analogy, I kind of feel like the Fed is treating the economy as if it's a falling airplane, and they're planning to just kind of try to lift it up right before it hits the ground and try to avoid that bottom, which would be a recession. I don't think they're going to be successful in doing that. I do expect a recession to happen probably in the first half of next year if we're not already in one, but I do think it's going to be relatively small and short-lived. I think we're setting up for a recovery to happen shortly after because of supply chains being restored, because of interest rates being so insanely high. I think inflation is going to come plummeting down, and we're already seeing it starting to cool down, but I think that's going to accelerate with these really high interest rates, which there is a little bit of a lag there too. So, we're not really seeing the full effects of it yet, and it's already very high and it's going to get even higher. So I think inflation is going to come down, and I think that's setting up for a longer term recovery. So as a long-term investor, I'm not really worried about what's going to happen here in the short term. I think 2023 will be a very volatile year, very similar to 2022. I think you're going to have to pick and choose the right stocks, do a little more research, put in that hard work to find the best stocks to invest in. But I think as long as you're thinking long term, I think you will be able to find some good prices for some great stocks in 2023 that will set you up for the longer term. So that's what I'm planning to do myself, and it's not something that I'm very concerned about. I like to buy stocks during downturns, now when they're in a bubble, and right now the bubble is bursting. I think prices are only going to get better, so I'm not very concerned about it. But like I said, short recession, I think it'll be short-lived, and I think a recovery is coming after that. But that's just my opinion. I could be wrong. Just, my opinion. Let me know what you guys think down below. Apart from that, though, some individual stock news that everyone is, of course, talking about is Elon Musk continuing to sell even more Tesla stock, which is helping it crash even lower. So let's just quickly cover that now, and then we'll finish up with a rapid fire of the biggest gainers and losers for the week. Okay, so it's reported now that between Monday and Wednesday of this week, Elon decided to sell another 22 million shares of Tesla stock worth about $3.6 billion, which brings the total up to about $23 billion of Tesla stock that Elon has sold throughout the past year. Of course, Elon doesn't really have to give any reason for this, but it's almost certainly due to the Twitter takeover, which costed about double that amount of money at $44 billion. And it's also been reported that Elon actually told Twitter employees that he was literally selling Tesla stock in order to save Twitter's business. Tesla stock, however, has been getting absolutely destroyed, losing more than 60% of its entire value over the past year. Of course, though, there are many reasons for this. I know the media, perhaps wants to blame it entirely on Elon Musk, but the fact of the matter is that the entire market itself has been falling all year long, with giants like Amazon, for example, also losing more than half of their entire value. And over the past 5 years, Amazon is only up 49%, while Tesla is actually up over 550% despite the crash. So you kind of have to put some of that into context. But regardless, there is no doubt that the selling from Elon Musk is definitely helping to crash the stock even lower, and that's also coupled with their own revenue growth slowing down to around 55% this year and 40% expected next year, which is down from the over 70% growth that they saw in 2021. Overall, though, I still think that's really good performance considering most automakers have been in decline, while Tesla is really still selling every single car they can make. And thanks to their industry-leading margins that are double the size of their legacy competitors, very impressive, their profitability is also soaring right now with about 50% EPS growth expected on average over the next 5 years. Don't get me wrong, the valuation is still very expensive, but it's at least coming down pretty fast. I mean, just less than a year ago, Tesla was sitting at a market cap of well over $1 trillion, and I think it was heavy in a bubble. They had a trailing PE ratio above 400, forward PE above 120, a PEG above 3, and a PS above 25. But now it's fallen all the way down to a market cap of less than $500 billion, trailing PE below 50, forward PE below 30, PEG of only 1.3, and PS below 7. That's much more reasonable. In fact, their PEG ratio is even lower now than the rest of the sector, despite Tesla being the clear leader in the electric market, which is where really all the automotive growth is even coming from. And they're even just barely above GM too, which is pretty crazy. I mean, people always say, these legacy players are so much cheaper. Well, Tesla's like right there with GM in terms of valuation. So in terms of a PEG ratio, at least. So I actually think that the stock would be pretty attractive right now if it wasn't for all the drama and the negative press that will likely continue to weigh on it for some time. To which Musk did make one little response on Twitter saying that he will make sure Tesla shareholders benefit from Twitter long term, but he didn't really explain how he would do that. The tweet was in response, though, to someone else saying that owning Twitter will elevate Tesla's brand, Tesla's reach, and Tesla's marketing. So it can be speculated here that Elon probably plans to market the company through Twitter, get more awareness to Tesla through it, which could actually help a bit considering that Tesla has never really done any marketing of their own. Time will tell if that actually happens though. Right now it's really difficult to predict where Tesla is going. Over the longer term, I am more optimistic about Tesla's business, but in the short to medium term, I think it's going to remain extremely volatile and perhaps continue to struggle because of this whole fiasco, especially other reasons too, of course, the economy and everything else. But I think the drama, the negative press, I think is also going to weigh on the stock itself too. And it doesn't help that Elon Musk is selling a lot of it too. Hopefully he stops now, but he has been selling quite a bit. I also feel that liberals are starting to dislike Elon Musk and Tesla by association, which is something that we hadn't really seen in the past because, Tesla was always a figure of climate change and electric vehicles, electrification, liberal talking points that they were very proud of, that things that they liked. And so they liked Elon Musk, they liked Tesla, and I think that that did make up a large portion of Tesla's customer base. And I'm not trying to get political on you guys. I'm just trying to state the facts here. I personally feel now, though, that liberals are starting to dislike Elon Musk and perhaps Tesla by association, which I suppose, like, better case scenario, conservatives could offset that a little bit if conservatives are now starting to like Elon Musk, which in the past maybe they didn't, and perhaps they like Tesla now by association too, which in the past, they didn't really care that much about electric vehicles and climate change and those type of movements. It depends. Obviously there's nuance with all of this and there's outliers, but I'm just kind of stating in the broad sense here. But the point is, do you lose some liberal customers? Do you offset that with some new conservative customers that you may have never had before? I don't know. I mean, at the end of the day, I hate it when companies get political. I'd rather them just focus on the business, provide a good product, and attract all customers, regardless of their views and ideologies. Everyone come together and just, enjoy a good product. But it's the world we live in right now. Things are highly political. Things are, getting more polarized, more tribalistic, and more controversial. And of course, Elon Musk is a very outspoken character and he's making a lot of moves. So it's just going to be in the news and there's going to be a lot of controversy going on. I don't really know what's going to happen here, but I'm personally not really touching my Tesla stock. I'm taking a backseat approach a little bit, and I'm just going to wait a little bit to see how all of this plays out. But I already own a large amount of Tesla stock that I want to hold for the long term, but I'm not going to be selling any right now, but I'm also not going to be buying any. And even though I think the valuation has come down a lot, it used to be really in a bubble, in my opinion, back in 2021. Now I think it's much more reasonable of a valuation. But I still don't really want to touch it because I think it's going to be extremely volatile and I already have a large amount of it anyway. So anyway, in conclusion with Tesla stock, I'm talking way too much about Tesla, but to summarize here, I think 2023 will be very volatile for Tesla. I'm not making any moves to it myself yet, but I'm still hoping for the best longer term. And that's just how I feel about it. Expect it to remain extremely volatile, at least in the short term. Okay, with all of that said, we are running a little bit out of time here, so let's just quickly do a fast rapid fire of the biggest gainers and losers for the week, and we'll wrap up the video right after that. Okay, starting first here with the gainers, nothing too exciting this week since most of the market was of course down, but Coupa Software saw the biggest gain at about a 27% climb for the week. I believe that's a fintech out in California that helps businesses manage their corporate spending. Pretty interesting business, but they mostly soared this week because of a new acquisition that they announced. We also had DocuSign climb by almost 15% for the week, which is one of my favorite spec stocks to track. They're of course famous for their digital signature hardware and software that are used for signing documents and different things like that. Really good growth during the pandemic because of the need for digital signatures, but they're still unprofitable, so it's a little risky and I just continue to track it for now. The famous V-shot company Moderna also shot up this week by about 9% thanks to their melanoma skin cancer treatment that is in partnership with Merck and is showing promising results in phase 2 trials. I actually own Merck stock myself, but not Moderna. For that, I prefer Pfizer stock, who has a better all-around business with a great dividend above 3%. Turning over to the biggest losers though, EV stocks took a big tumble this week. Some of that might have been caused by Tesla dragging them down a bit as they fell about 16% themselves, but I actually think it's mostly due to these being highly valued, more speculative stocks that tend to get crushed during market downturns, with Rivian falling 17%, Lucid falling 15%, and then if you go a little further down the list, there's even the Chinese EV company NIO also falling by over 8% for the week as well. I actually took that as an opportunity to finally buy NIO stock myself. So if you want to know more about that, I recommend you watch the last video I posted about it. But apart from those, a few more notable mentions that dropped around 10% this week include Coinbase, who continues to take damage from all the heavy crashing and selling in the crypto exchange markets, as well as a bunch of riskier TV streaming stocks like Netflix, Paramount, which owns Paramount Plus, Roku, which is the TV operating system company, as well as the owner of the Roku streaming channel, and also Warner Brothers Discovery, who of course owns HBO Max. These can sometimes be high growth companies, but all of them tend to struggle with profitability, hence why the market downturn is really weighing on them right now. As for me though, when it comes to video streaming, it's all about Disney and Amazon. Those are the two stocks I own. Those are my favorite plays on the future of video streaming. Disney with everything Star Wars, Marvel, all the Disney content, Hulu, ESPN Plus, Disney Plus. Amazon, they acquired MGM. They're going heavier into video streaming. They have their Prime Video service, and it's going to be fueled by even more blockbuster hits from MGM, like the Rocky franchise, James Bond franchise, and lots of other things. So I like those two the most. These other ones, I'm not particularly that interested in myself. Anyway, that's going to do it for this week's update video. Hopefully I didn't take too much of your guys' time this week, but I hope you enjoyed the video. Let me know your thoughts on everything that we discussed down in the comments section, and I hope that you all have a great upcoming week too. Hope you're all doing well. I'll catch you in the next one. Take care. Bye-bye.